10 different Wall Street analysts have downgraded Ford and GM stock within the past 48 hours and have expressed significant concerns of financial instability and potential bailouts being needed within the next 24 months of America's two biggest automotive companies. Ford's 45% plunge this year is a testament to slowing US consumer demand, says investing.com. It seems nothing is working for automakers in the current macroeconomic environment, they say. Despite signs that pressure on the global supply chain is finally easing, the recessionary environment is pushing consumers to halt their big ticket purchases, including cars, or so they say. If this was really true, why are Tesla's sales figures and BYD's at historic highs, up more than 50% year over year? If it was all so tough for everyone, why is it that EV manufacturers seem to be having no troubles at all selling their cars? Hello, my friends. Welcome to the channel. I'm the Electric Viking. Great to see you. Welcome to all the new subscribers. Great to have you guys. Welcome back, everyone else. Wonderful to see you. General Motors and Ford stock have been downgraded within the past 24 hours. Many sites are now saying, sell your stock, sell your stock. Well, it's not the bottom. You can't catch a falling knife. Have you heard that saying? You can't catch falling knives. They're saying GM and Ford, they're falling knives like Alibaba was last year. You know, is this actually true? Well, I don't know. But slowing demand, is that true? Absolutely. The thing is, right, what happened back in 2018? Remember 2018, Tesla pre-sold 400,000 Model 3s. Remember that? They hadn't even made one. And they pre-sold 400,000 Model 3s. Everyone's forgotten that. The thing is, that was actually 2017. That was 5 years ago. So GM and Ford saw the demand for EVs 5 years ago. And you know what happened? GM actually said the following year, we're going to have 18 different electric vehicle models available for sale. 18 different models, not 18 total vehicles, which would be about a fair number for them to have sold in the fourth quarter of 2022 because they only sold 27. They said we're going to have 18 different models available in October, in fact, of 2022. And this very month, they said. Did it happen? Well, yeah, you already know the answer to that. To me, in my view, it wouldn't really have mattered about the 18 models. General Motors didn't need 18 models. I think GM and Ford could have had 2 models. Ford could have gone, you know what? We're one of the biggest car companies in the world. Clearly, this Tesla thing, this EV thing, people want them. 400,000 pre-orders. You know what? There's never been a car in history of the automotive industry with 400,000 pre-orders. That wasn't a Tesla. Cybertruck has what, 1.5 million. Before the Model 3, there had never been a vehicle in history with 400,000 pre-orders before it was even for sale. So why is it that Legacy Auto didn't take notice of that fact back then? Why is it that Ford and General Motors stock are at historic lows? That their investors have lost billions of dollars as a result of them not being prepared for today. And instead, we're hearing this US media narrative. What are they saying? It seems nothing is working for automakers in the current macroeconomic environment, despite signs that pressure on the global supply chain is finally easing. Why does it only apply to legacy automakers and not to Tesla, Leapmotor, other Chinese EV manufacturers, and BYD? Well, obviously, because the demand is for EVs. Now, investors.com is saying that a potential serious recession on the horizon has some analysts worried about shares of major automakers. Ford and General Motors have both received downgrades on Monday, despite rising third quarter sales. Ford stock and GM stock both continued to slide Tuesday morning after tumbling on Monday. So what are their current prices? Well, Ford stock, $11.77. Back in August of this year, Ford stock was sitting at $16 US. So it's dropped from $16 to $11, which that actually is a pretty significant percentage decrease. But if you actually compare that, the price of Ford stock back in December of 1998, back then it was sitting at $32.60 US. That said, to be fair, Ford Motor Company stock has lost more than a quarter of its value in the past 30 days, amid growing inventory concerns. And the company is now down more than 45% since the beginning of the year. Adding to the sell-off, Ford's stock was down nearly 7% for the day at the time of this video. Now, Ford's sales actually rose 16% to 464,674 vehicles in the third quarter, a little bit below expectations of 473,000. However, Ford saw a quarter-over-quarter sales decline. Ford sold 483,000 vehicles in Q2. Now, Ford are actually saying that it has a lot of vehicles sitting in inventory. In fact, 40 to 45,000 vehicles which are missing something. Some of them missing Ford badges, some of them missing, various parts. $40 to $45,000 average price vehicles. And it's saying it's confident it can complete those vehicles by the end of the year, which is, that's a long way away. That's 3 months. Anyway, it's confident it can get them to people before the end of this year and start to turn this narrative around, start to improve the finances of the company. Here's one of the big problems. Here's one of the key reasons why the stock's really being downgraded. Well, Ford's unexpected bill of $1 billion that they had not planned for at all, thanks to an increase in their parts supply costs of 13 to 20%. One of the key reasons for this massive increase in costs to Ford is the fact that they're not vertically integrated. That's the truth. You might not want to believe that, but that's actually the reality of the matter. Ford does buy the majority of its parts from other suppliers. Therefore, those suppliers can pretty much dictate prices to Ford. Now, this trend is really a U-turn from last year when car companies were in limited supply and people were willing to pay above market value for cars. That's starting to change in the US now. UBS has cut Ford's earnings per share estimate by even more than most at 61%. That's a massive downgrade. That means UBS is saying Ford are pretty much screwed this year. I'm concerned. I hope this isn't actually true. I hope they're not going to go this badly this year, because this would be a pretty terrible result, in particular for Ford investors. There's a lot of mum and dad investors in Ford. There's a lot of, just people who don't have a whole lot of money who are invested in Ford and General Motors. And genuinely, these are the kind of people who probably should tune into this channel to actually find out what's really going on, what's about to happen over the next 10 years. And the thing is, right, Ford is struggling more than its peers, or in particular more than its direct competition of General Motors and, of course, Tesla, when it comes to securing better deals from its suppliers. That $1 billion, GM and Tesla didn't report an unexpected $1 billion bill. Only Ford did. And Ford expects adjusted earnings before interest rates and taxes in the range of $1.4 billion to $1.7 billion when it will report its Q3 earnings later this month. The preliminary estimate is well below the $3.7 billion adjusted earnings before interest and taxes that Ford reported last year and the $3 billion it earned a year ago. Shortages of critical parts will also keep its inventory of half-completed vehicles elevated, which just adds more costs. Ford having these vehicles just sitting there doing nothing, it costs them money. It costs them money in terms of finance. It costs them money in terms of maintenance, having to wash these cars, store them, and just drive them to this facility, then drive them to customers, and then try and work out what parts each car is missing. It's really a bit of a nightmare for the company. The other problem, persistently high raw material prices and a threat of a global recession could make it difficult for Ford to raise cash to fund its transformation, which is what it requires. It requires, General Motors and Ford, they're both saying for us to transform into being majority, or complete, in GM's case, only making EVs, requires, $30 to $60 billion. How are they going to fund this? With profits from gasoline-powered cars. If they don't make profits, how do they fund it? Yeah, big problem here. The thing is, Chief Executive Officer of Ford, Jim Farley, is saying Ford will invest $50 billion in electrifying Ford's lineup. He has accelerated Ford's timeline to switch to battery-powered vehicles and pledged to build 2 million EVs a year by the end of 2026. $50 billion US. Where's Ford going to get it if this is the current situation for them, if they're getting these massive costs, if their profit is so much lower than expected? It's a big, big challenge for Ford right now. That's the reason Ford stock is basically would appear to be massively undervalued. Seeking Alpha are saying you should be buying it immediately. It's an amazing deal. Price to earnings ratio is sitting below 5. historically that's very, very low, which is true. And to be honest, I mean, Ford is an amazing deal in comparison to Honda, yeah, or comparison to Nissan. Price to earnings of those companies is more than double, even though there's no structural reason for that. They're not really in better positions, to be honest, in terms of their transformation to EVs. They're, in fact, in a worse position. But the reality is that's the current situation. So Ford is, in my view, less risk than those companies, but that doesn't make it a good investment, does it? So what are investment analysts saying? Are they saying you should buy Ford stock? Well, investing.com's survey of 21 analysts, 70% don't recommend buying the stock, even after the massive falls in the price. 12 are saying just do nothing right now. 4 are saying you should sell immediately. And 6 are saying you should buy. Now, what about General Motors? Well, General Motors sold 555,580 vehicles in Q3. That's an increase of 24% year over year. They beat expectations of 539 vehicles by a pretty good margin. That's 16,000 more than was expected. But GM sold 575,000 vehicles in Q2. So their numbers are down a little bit from Q2, when you would have expected them to maybe be up, considering the fact that, they're ramping production because, there's always been all these supply chain bottlenecks with semiconductor chips. Now that's been more or less sorted or close to it. Therefore, you'd want their production to increase versus Q2. That hasn't happened, but that said, GM, I believe right now, are actually in a better position than Ford. For one key reason, they've just passed Ford in EV sales. And I do think that actually, if you look at their projections, if they actually hit their projections, which is, they could be Disneyland projections, they could be fanciful, but if they do, then they could in fact outproduce and will likely outproduce Ford in terms of electric vehicle sales next year, and in terms of overall vehicle sales, and in terms of overall profit. However, Ford stock was downgraded as well, and GM stock dropped more than 1.5% in the first half hour of trading today after losing 3.9% on Monday. UBS analyst Patrick Hummel said the overall sector outlook for the automotive industry for 2023 is deteriorating so fast that demand destruction seems inevitable. He expects a shift from under to oversupply of vehicles, right? He's saying there's going to be oversupply of vehicles next year. This will lead to a price war and therefore a loss in margins. Hummel predicts GM's earnings will more than halve next year, and that the rapidly deteriorating top-down picture makes it unlikely the stock will rise over the next 6 to 12 months. Hummel downgraded GM stock to neutral from buy and cut his price target from $56 all the way down to $38. 56 was his previous target. He's now saying $38. That's a huge difference. Now let's have a quick look at GM's stock price. 1 month ago, exactly to the day, September the 12th, GM stock price was sitting at $42.30. Today, it's sitting at $32. So it's gone down a fair bit, right? 25%. However, 1 year ago to the day, 12 months ago, General Motors stock price was sitting at $58 US. I mean, it's nearly lost 50% of its value. Current PE ratio is sitting at 6.2, which, I mean, once again, that does seem very low. It does make GM look like good value. But remember, if there is a price war, then there's going to be a limited number of consumers. If there's a limited number of consumers and companies have to bring their prices down, who can afford to do that? Well, who has the best margins in the industry? Tesla, well and truly. It's not even close. There's a mile of difference between the margins of GM and Ford versus the margins of Tesla. So it will be difficult for companies like GM to bring down their prices because they currently make a loss on their EVs, as do Ford. How much more can you bring down prices of those vehicles? Well, you can't really if you're only making a loss on them. And the other thing is, GM is saying they're going to be investing $70 billion on electrification. They asked, basically the market said to GM, where are you going to get all this money from to put into changing your company, into building EVs instead of gasoline-powered vehicles? And GM said, well, future profits. And everyone said to them, well, what profits? I mean, are you talking you're going to make $70 billion in profit that you can just put into this in the next, 4 years, 5 years? And GM was like, yeah. Well, how? And everyone said, well, how? And they said, well, one of the key ways we're going to do this is subscription services. Yeah. Okay, so they're going to make 70 billion. Well, let's just say they make half of that, 35 billion in subscription services. Is that real? Can you really rely on that? That to me sounds like pure fantasy coming from Mary Barra. She's just like going, subscription services. Yeah, that's what we'll do. We'll become the next Netflix. Well, Netflix aren't doing so well themselves. So should you buy either of these companies? Because they're on the dip right now. They're on the dip, well and truly. I wouldn't, but I just bought Tesla stock. So maybe I'm just a Tesla brand fan. Let me know your thoughts in the comments section below. Thanks for watching. Bye-bye.